following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 286. You get the NASDAQ off 27. S&P's down 14. Gold contract down $2.70, trading at $12.77 an ounce. Silver down 12 cents, trading at $16.31 an ounce. Light sweet crude down 80 cents, $65.05 a barrel. Notes and bonds, 10-year note up 8 ticks, 119.27. 30-year bond up 18, 144.04. King dollar down up 273 ticks. Trading at a price point of 94.730. The euro, folks, is trading at 115.75 to 1 US dollar. The yen is out here at 110 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. This is going to be wild watching this thing shake out, folks. So you had the, well, actually, let's go into the E-minis. So we had the E-minis down this morning. 3 o'clock in the morning, it was a monster downdraft. We were down at a price point. Come on, baby. ESU8. Okay, so we were down trading out at 27.35. Right now, you're 30 bucks above that. We're at 27.65. And bottom line, folks, it looks to me like, yeah, this thing might end up being down 10 bucks. We're down 14.50 right now coming into the close, but guess what? You get another rejection of lower price. You're going to have lighter volume. On the short-term basis, this thing still wants to bounce. On the longer-term basis, guess what? This thing wants to go south in a huge way. If we go over to the China market, we take a look at what happened last night. What you're going to see sticking out like a sore thumb is the February 9th high-volume swing low that many of our equities still have, that the S&P still has, that hasn't tested yet. And if we first go into the Hang Seng, what you're going to see inside the Hang Seng is that last night, that was down to 2.7%. And that was coming into the February 9th high-volume swing low. It came in with lighter volume. Bottom line, you still had heavy volume. The low for the Hang Seng is 29,129 on February 9th. We did 5.3 billion. Last night, you got down to 29,332. Bottom line, cut about 150 bucks above that. You had volume come in at 3.7 billion. So what does that mean? Well, it means you can get a little bounce, but bottom line is that at the top of these consolidations, you have no volume at all. So that's still saying it wants downtown. If we go take a look at the Senjing, this baby, this blew out its lows. It's February 9th lows, blew them out with volume. Inside of this, there was over 1,000 stocks that were down 10% limit. And the 10% limit, bottom line, is that they'll open back up tonight, and this is going to be a little problem child. So your February 9th swing low, which was going after, was 1658. We are at 1594. The 1658 had 19 billion. Well, last night we blew that apart with 21 billion. Bottom line, we come over to our own S&Ps, and this is what you're going to see. This is the setup, man, and it's quite a setup. So our cash S&P right now, 2762. February 9th, folks, is 2532. Bottom line, I expect what we're going to see here, the market's been plenty deviant enough. I expect you're going to see a little bounce. Bottom line, whether it's taking 2 weeks, 3 weeks, 4 weeks, as we go through this summer, you're going to see this market continue, with the S&P, the Dow, continue to lower prices on a continual basis. Small caps, different animal. Let's go take a look at the small caps. And here's the big divergence. Small caps out here right now are at highs. We take a look at the Russell. What you're going to see, Russell 2000 right now, 1691. The high of yesterday was 1692. We've hit 1692. Bottom line, this thing's going to close at the highs. We take a look at the IWM. And what you have with the IWM, same type of setup. And the just so you understand the difference is Dow Industrials, S&Ps, large international presence, Russell 2000, not. Bottom line, you're talking about USA, Canada. Bottom line, much smaller footprint. These babies are at highs. So you see a lot of bread going into those. More than likely, we'll see whether it's coming out of the S&P or not. Notes and bonds. Bottom line, they are the ever-ready bunny out here. Bottom line, notes and bonds, they continue to want higher price. We had the 10-year note out here up 9 ticks right now. You've done 1.3 million contracts. The swing high from the 20th of May wants to get hit. That swing high is 121.03. If we take a look at the yield, we are yielding right now 2.88% inside the 10-year. Gold contract, bottom line, gold contract, you're dealing with confirmed ABC structure on the way down. Gold got taken apart last Friday, got taken apart with volume. 1267 is the number. Now, what's intriguing is that we hit 1272 today, so this is pretty cool, actually. What would happen inside the gold contract, and we're almost there. We're actually just about there. So you get down to the 1272.60 today. 1267 is your price projection. We have a contraction of volume now, but when you break a B point, whether it's going up or going down, and the way it got taken apart, it's pretty good that you probably get the price projection. That being said, what we have happening is that if gold actually could close inside 1277.90, then what you'd be dealing with is, okay, what kind of bounce we getting? Bottom line, I suspect, number one, it looks like it wants to hit another $3 or $4 later, lower. That being said, if we go take a look at the GDX, bottom line, these gold equities, silver equities want higher price. They just can't take them apart. It's pretty amazing, actually. The GDX right now is trading down 15 cents. Your swing low is down there at 22.01. We hit 22.05. You have a huge contraction of volume, huge. You're talking about you're coming into 35 million. You've done 16 million thus far. So you can see huge contraction of volume. We go over to good old King Dollar. Bottom line is that King Dollar is wavering around this 95 mark. Stay right there, folks. We'll come right back. We have the Dow Industrials right now down 278. NASDAQ off 23. S&P's off 13. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 289. Nasdaq's off 26. S&Ps are off 14.5. We take a look at some of the percentages out here. You have the Dow down 1.1%. Nasdaq is down 0.3, as is the S&P. And believe me, that's nothing compared to where you were walking out here this morning. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil has an outstanding show right here every trading day, 12 to 1 Eastern Standard Time. He also has a great newsletter, The Opening Call. Now, the way you get the opening call, you come over to our website at TFNN, go to newsletters, go to trading newsletters, and test drive the opening call, 30 days, money back guarantee. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you.
Cool, man. So I see we have the Dow Industrials, I believe we get up here, right?
Yeah, so a couple of things are going on. One is that for quite a while now, we've been seeing the patterns that I discuss on my show, the Tiger Technicians Hour, every day at noon. I discuss this a lot, and for my subscribers, I actually give examples, and I give little studies based on it. They're the cup formations and the arch formations, and they've just been continuing over and over for weeks. And what we're really looking at here is the Dow May. You remember on Thursday, when I spoke to you before my webinar on Thursday night, what I was saying is we've just gone short for subscribers. We were long the Dow, we've gone short the Dow, and we've also gone short the SMHs, the semiconductor index. We had a really nice gain in the semiconductor index. And now what I was looking at is this bifurcated market. That's a split market, should continue. And in the webinar, I spent a lot of time talking about what was weak and what was strong and what we can expect for the coming at least 3 months, but probably going into the next 6 months. And so we're looking at the Dow. The Dow has pulled back from 25,402 down to 24,567 this morning. So that's about a 900-point decline. It's been down it has been down every single day since it made that fourth highest peak to peak D top on the 11th of January. So it could have a little bit of a bounce here, but what's most important is that in this middle chart, the one that I call the weekly chart, I show on the left is the daily, in the middle is the weekly, on the right is the monthly. I show there's a pattern, I call it template, and I showed a pattern that looks like a lowercase h with a long back, and then there's a little arch, followed by another arch, and I call that the lowercase h going to a lowercase m formation. So it was really important that we didn't actually break this uptrend line. Well, we haven't, the month is not finished. But anyway, at least for now, we haven't broken that resistance line by going above 25,630. We're trading now at 24,680.40. So that's 1,000 points lower than what I was looking at as very strong resistance. But it's that H to M pattern. And I think that that's really what we're looking at. And as long as we've got a rotational correction, meaning in this case, the semiconductors you just mentioned went to the IWM, the Russell 2000, went to an all-time high today. And yeah, the Dow is down 1,000 points. So this is a very split market, and it's probably to do with the assessment of the taxes, but that's going to take a little while to really sort itself out. Most importantly is that the Dow is still somewhat vulnerable. The big support is going to be at 24,000, right here, 24,000, what is that? 247. That was the low on the 29th of May. That's this week, that's the level to hold. And the other thing is, within the context I've been talking about, and this I spent some time on Thursday night in the webinar, and that webinar is still available for anyone. It wasn't time specific that it had to be for that day. It's an ongoing thing, and with my daily newsletter, it's really an ongoing look at the markets and to see how the different sectors are unfolding. And if you look at the SMHs, they did not go to the all-time high of March at 114.55. This is the semiconductor index. And basically, they've led the market up and down for 2 years. So that's it to me. If the Dow and the S&P don't make a high in this rally that we just had into last week, then the semiconductor is probably a good indicator for at least the Dow and the S&P. So what you've got is the semiconductor index has gone from 112, round number high, to the low today of 106.14. Not a big deal, 6 points, but it is a big deal in the sense that the weekly chart has not really got the same strength as it had going to the last high. So I'm watching this very closely. So that's the whole set of parameters. What's also very important is, you remember, from way back, we've been along the dollar. In fact, we've been along the dollar a number of times from the just about the low that was made in February of this year and the 88.25 level. The last long we had was at 90.07, and the dollar is trading right now at 95.07. So what's really important is the breakout that occurred 3 days ago and is actually seeing a higher close today than the 95.03 level back on the 29th of May. That for me is very important because you've got a cup formation, and if the technicals are actually improving rather than making the double top to start pulling down, there's a chance that the dollar could actually go a little higher. But the weekly chart is the one that really is impressive. You can see this cup formation, and what's nice is that we don't have to do the futures for this. We've got a particular trading vehicle called the UUP, so that subscribers don't have to be involved in futures or anything. They could buy it like it was an ETF, and in this case, it's a fund. So it's done very well. Leg D in the weekly chart, so for the technicals are very good. I kind of like it. I mean, I think the dollar has the potential to go higher. Maybe it's getting ready for a little bit of a digestive phase. But wow, this is really, look at that monthly chart going from that 88.25 in one leg to the upside. I like that. So we're being very selective here. We've raised some cash because we had a good feeling that the market was going to pull back. We still own our UTX. We've taken some off to at least lock in some profits. We're long from 119.77. It did hit the 128, trading at 125.19. We've got a position still. This, I think, is going to be a big clue for the Dow as a benchmark for me, because if it's able to hold key support above 120 in any big consolidation that we have here, when the Dow eventually comes back again and starts moving higher, maybe this could be a leader again. We'll see. But it's been a nice move so far.
You know, what's interesting is that, I mean, I don't know, the Dow, bottom line is that is where we were in December 27th of 2017.
It's
right?
given back all of 2018's gains, yes.
Yeah. And those, doesn't look like those big companies are going to have any fun with all these tariff issues.
You know, it's going to take a while to sort out, but at this particular point, there's absolutely no question. I mean, if you're looking at a Caterpillar, if you're looking at any of the heavies that have international, especially Chinese connections. Caterpillar is a very good example of it. It's gone from 173, the high that was made earlier this year, trading in the 143 area, 30 points. That's a lot of points for a Caterpillar. So yeah, I think absolutely. So this is it's very specific. And if you look at the IWM, I didn't want to say to go short to do anything with the IWM. I just wanted to watch it because it went sideways when the Dow was going down. And look, today it made an all-time high. It's just off the all-time high as we speak. So this is definitely what we call a bifurcated market, split market.
Yep, the USA versus doing business overseas. That's the bottom line.
Correct. Yep, correct.
Listen, folks, come over to our website at TFNN. You go to newsletters, go to trading newsletters. You see the opening call right there. Test drive Basil's newsletter, 30 days, money back guarantee. And, of course, every trading day, 12 to 1 Eastern Standard Time. Give him a call. Basil, thanks so much. Have a great one, safe one. We look forward to the show.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 318, Nasdaq's off 37, S&P's are down 17.5. Let's go take a look at some of the higher volume equities out here. This is going to be another low volume day, pretty wild. You get Advanced Micro down 43 cents. Apple's down 3.30. We have Verizon Communications up $1.15. You get Facebook off $1. Facebook had been down 3.50. Netflix, you get an ABC structure on the way up. That's up another $12 right now. 402. NFLX. If we go over to Netflix and take a look at it, this little powerhouse, no doubt. So Netflix up today, has a volume again today. And what's intriguing here is now you got ABC structures inside an ABC. Let me see this one, 356. Yeah, so you get another 40 bucks, which sets up 426, and right now you're at 402. I believe this is a 446, A to B equals C to D. That's when it had taken out the B point in April. So 178. 178, 278, a buck 50, 270, 370. Yeah, you're into about 446. Big number, man. And with that move on Netflix out here today, that had to do with broker-dealer pushing it at, saying it's going to go to 500, I believe. Let's see. There it is. Yeah, I'm not sure who this company is, but bottom line is that they got it going. U.S. streaming site Netflix on Tuesday was given a 500 price target by analysts at GBH Insights, the highest on Wall Street. Who knows who GBH is? Bottom line is that they definitely got it going. Netflix out here only has a 4.5% shot interest. So bottom line is that you have real buying out there inside of Netflix. We go over to Tesla. What you had out here today, Tesla is taking a hit. Tesla down 18 bucks. You get 11 million shares traded. We bring this back. I believe Tesla's right next to its high. So the high in Tesla is 386. We hit 373. This will be intriguing to see if, in fact, that's it on that short squeeze. Because what you have is this. The short squeeze has been tremendous on Tesla. That is because you have a short position of 30.84%, or 39 million shares out of a float of 169 million. Now, that being said, what's sticking out like a sore thumb in Tesla also is that you get the high volume swing low. Bottom line is that we'll see where this shakes out, but you can expect a lot more volatility. And what seems to be happening now inside the Tesla model, at least, is that now you're getting stories that are negative to the stock. What you had out here this morning was you had Musk coming out saying one of his employees were basically sabotaging some of the software in the aspect of there it is. So Elon Musk, worker admitted to sabotage. Bottom line is that that's pretty intense. There's no doubt about that. But my point more than anything, so let's see. In an email to Tesla employees Sunday night, Elon Musk said that an unnamed employee admitted to sabotage the company's Fremont, California plant. The problem comes as Tesla scrambles to boost production. He's going to blame anyone and everything, folks, for the bottom line of not coming up with the amount of cars that he's supposed to get off that assembly line. And guess what? That's politics at its best, and that's what you're going to be probably hearing about on a continual basis inside Tesla. If we go to the bond market and stay inside that bond market for a second, bottom line, they keep buying bonds. The TLT, 20-year plus bond fund, that's up 58 cents today. You're trading at 120.85, and this has a high volume high at 122.52. That thing wants to get tested. We go take a look at the XAU, the HUI, these XAU, the XAU, HUI, XAU today down 62 cents. Haven't broke a swing. Bottom line is what you're going to see out here today. Now, this is where it's going to get really interesting. We had a contraction of volume yesterday. You're going to see a dramatic contraction of volume today. Because when we take a look at some of these equities, like let's say if we go over to an Eagle, AEM, we already did the GDX, and you can see the contraction of volume inside the GDX. We go into AEM, what you're going to see, you're down on 800,000 shares. You're going into 1.1 million. You're going into strength of 1.5 million. Barrick ABX, we take a look at Barrick Gold. Barrick out here today actually is up 4 cents. Barrick has rejected lower price. That's really intriguing, man. That's pretty wild. You tested the low of last Friday, which was the 1270, hit 1272. You're doing it with 6 million shares versus 23 million. Newmont, we take a look at Newmont. Newmont is the second largest weighting inside those indices. Newmont did the same thing. Newmont came down to 38.06 and said, see ya, don't want to be ya. Bottom line is that that also wants higher price. King Dollar, let's go take a look at King Dollar. So DX, first I'm going to put King Dollar on the basis of a continuous contract. And what you're going to see is that DX1 is that this 95 area is the swing point from October of 2017. It's 95.070. That's the number you're going to keep your eye on. We got over it yesterday, closed underneath it, got up to 94.945 today. We'll see, if that can launch that number. If, in fact, it can't, then what you're talking here is that we're going to go right back down to the bottom. The other side of that is that if it actually did launch that number, there's not much in between here that would slow it down. You actually do have a large supply line on the other side of this. Yeah, there's a lot of resistance right at this level, actually. It's not the resistance from how we came down in October, from January of 2017 through September of 2017. Where the resistance actually comes from is how far we traded here in 2015, going all the way over to 2016. So it's going to be pretty wild watching that whole thing shake out. Silver, well, actually, let's go inside the commodity market. We're going to have our man, Mr. Andy Hecht, on the next hour, and then, of course, he has his own show from 5 to 6. These commodities out here, if you happen to be watching Tiger TV, they got toasted and roasted out here today. And they also recovered quite a bit compared to where they were. The only commodities in the green out here that are tradable is that you had live cattle up 1%, aluminum, which is really not tradable, is up 0.7%. Other than that, cotton's down 4.5%, wheat's down 2.3%, soybeans down 2.2%, copper down 2%, hogs, excuse me, folks, hogs down 2%. And what we don't know yet is this, folks. This is where we had our man, Mr. Kevin Hinks, on this morning. It was pretty cool talking to him because he knows grains upside down. And, I was saying, hey, listen, man, these grains this morning were down 4.5% to 5%. That being said, he didn't feel that the whole China deal was to claim there. Why? Because what the Midwest has had is that a lot of rain after some hot weather, which is basically, bottom line, can grow leaps and bounds. We're going to know in the next 3 or 4 weeks, is it the weather or is it China? Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now down 323. NASDAQ off 34. S&P's off 17.5. And let's go over and take a look at First Majestic for one of the tigers out here. So AG is the company, is the symbol for First Majestic. This is a large silver producer. Our low for the year is 493. The high is 850. And the question is, on a pullback, is this the buy? This has had quite a run. I think it's going higher. I wouldn't be biting right here. We just went from 493, 797. You pull back a bit. Yeah. Do I think it wants to bust up? Yeah, I do. That being said, if you go over, there's a few more. Let's put it this way: there's a few more that are better buys right now. Yamana Gold is one of them. What you have here is this. So Yamana's up 6 cents. You're at 305. Two different things have happened here. We get a bad market in the aspect of metals. Metals continue lower, right? This equity has done two different things. It's taken B points out of an ABC structure on the way up. You get a $3 equity that can move quite a bit. Yamana is actually, it's a personality stock too. So what you also have is that you get a high volume high out here at 380. When I look at this, it's like, you know what? This thing looks to me like it wants to go before AG does. If we go over to another silver one, who's definitely a personality stock, is Endeavor Silver. Now, Endeavor is kind of set up the same way, meaning as is First Majestic. The difference being is that the last time that we did go up here, you went up with big volume. So it's like, okay, First Majestic, Endeavor Silver, that is eating into its vicious downdraft from March 3rd, the week of March 3rd, But when I look at both of them, which I like those silver stocks, but what has happened is this. The silver stocks actually moved much before the gold stocks. If we go over to PAAS and take a look at it, what you're going to see, PAAS, bottom line, that had hit high, that's 3 weeks ago, hit a high. 1875, you're at 1750. Where I would wrap my head around right now, I'd wrap my head around these gold stocks, because in this move down, a few of these gold stocks did not go south with them. They didn't go north either, but they didn't go south. And that's where I think the strength is going to, more likely, it's going to be, my take is going to be a catch-up. That's how this seems to be shaken out. Let's go over to the XLE, the XLF. Inside the oil market first, the XLE, flat market out here today, 74.68. Now, this baby, is near the top of the consolidation. And on all of these indices, folks, you want to wrap your head around where are the high volume lows from February 9th. And I'll show you, when we started the program, I was showing you how The Hang Seng was testing it. The Sengjing blew it away. Well, look at Google. Now, this is pretty wild. And this is a heads up. Google was one of the first equities to test its high volume low, and it rejected it. Rejected it, had lighter volume on the rejection. Bottom line, the high volume low that we're talking about with Google, February 9th, same deal, $992, right? You had high volume, 3.5 million. What does Google do? It goes from 992 in February. March, it goes up to 1186, and then it comes all the way back down and test it. You had the test done with 3.3 million versus 3.5. Took months, but guess what? Now you're back at highs. So that's what you're looking for in a test, and your test will either be successful or it'll blow it away, or it just turns around a test with about the same amount of volume. If you test a low or a high with about the same amount of volume, you're going to be right back down there doing it again. And then the correlation is what you want to look at is that, okay, how am I hitting your highs in a consolidation versus how am I hitting the lows in a consolidation? Let's go over and take a look at the financial equities, and then we're going to go on to Oracle and FedEx, because Oracle and FedEx are going to be coming out right after the market close. XLF wants lower price. You know, whatever's happening out here, bottom line, folks, this goes right back to the bond market again. Rates are not going to be going up as much as fundamentally we all, maybe not we're all, but that we may think that they are going to go up. That's right. It's basically baked inside the XLF. XLF wants lower price. You get lower price, that means the spreads are not going to be there for banks to make money hand over fist. They've never made so much money, but that's how that seems to be set up. If we go over to Oracle, Oracle is going to be coming out with numbers right after the close today. So let's go take a look at Oracle. Okay, so the low in Oracle is 44, the high is 53. That'll be coming out right at market close. Oracle comes out pretty quick. Let's put this. So Oracle's down from trading at 53. You're at 46. Ooh. Yeah. Oracle's got trouble. Well, we'll see how this shakes out. This is always fun when numbers are coming out, so we'll know real soon. So Oracle's down from 53, comes down with vicious volume, goes down again last week with vicious volume. So Oracle looks to me like 45, and it can actually go after this 44 number. FedEx. Now, FedEx is coming out at 4:15. FedEx trading 258. FedEx definitely has a high volume low at 226. Let me put this on a weekly. Yeah, you get so FedEx is bottom line. You know, that high volume low, that's where it wants to go. So we'll see what FedEx has to say fundamentally, and we're going to know that really quick too. The numbers. Let me see the numbers that they're looking at. So revenue. FedEx is looking to do 17.2 billion. This evidently is supposed to be a good quarter for them. This is the I'm not sure whether they're in a fiscal year or not. Bottom line is that that's what they're going to be coming out with, though. So when you break down FedEx, the air portion is 27 billion. The ground portion is 18. TNT Express, that's over in Europe. That's 7 billion. You get an express, then you get freight in the all over the world, 6.4 billion, and then the services are 1.6. They're still growing well, though. They're growing at 7% a year. They're growing at 14.5% a year internationally. So those are decent numbers in the aspects of where we are. If we go take a look at the volume out here, and this is going to be this market is so deviant, it's amazing. So you've done 547 million. That means we're going to come in about 800 million, 850. It's about the same that we did yesterday. On the composite, looks like we're going to come in about 2.2, 2.3 billion. And if we do go look at the composite, composite's at highs. Yeah. See, the NDX 100, the composite, as well as the Russell 2000, it looks to me that first what we'll see is that we'll see the money shift into those. They'll jam those a little bit higher. And the way that this actually is setting up, it looks to me like we get into July, and then the closer that we get from July to August, September and October, this is when the real pain is going to start coming in this market, right across all the indices. Stay right there, folks. Come right back. Dow down 308, Nasdaq off 26, S&P's down 15.
His brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 304, Nasdaq off 26, S&P's down 15. Of course, inside that Dow Industrials, folks, bottom line is that you just need Boeing to go one way, and that sucks out most of the breath inside the Dow Industrials. Out of the 300 points Dow, you have Boeing is putting 95 negative points into the Dow. So that is the big number. Caterpillar's putting 38. 3M's putting 36, Goldman's putting 23. The only equity that's putting, well, there's a couple of them putting a little positive note inside the Dow. That would be Johnson & Johnson's putting 8 positive points, Verizon 7, Walmart's putting 3. Inside the NDX 100, what you have, the strength versus the weakness out here. Strength. There she is. Strength inside the NDX. Good old Netflix. Netflix putting 3.7%. Regeneron 3.5. Gilead 2.5. Taken away from it, Tesla is the culprit. Tesla down 5%. JD's off 4.3. Baidu's off 2.6. And you get C-Trip off 2.5. You can see out of the largest losers inside the NDX 100, 3 of them actually basically trade They're China stocks #1, and of course they do trade on that China market. What's going to get intriguing out here tonight when China does open back up? You had over 1,000, well, I was at, I believe, 1,038 stocks were down the limit of 10% last night. So that is going to be one heavy scene. The Hang Seng itself looks like it wants to bounce, so maybe you'll get a short bounce out here. Our markets, bottom line, you can see that compared to where we started, S&P's bottom line, you get a bounce going. I suspect it's going to try to get up a little bit higher. Notes and bonds are leading the charge higher. Lower rates, higher prices. King dollar, that baby's still a toss-up. The yen, if we go over to the yen and we take a look at the yen, this yen, JPY, this is going to basically help the gold market in general. The yen today, we traded down to 109.55. Right now, you're at 110.04. Stay right there, folks. We're going to be coming back with some numbers after the close. We have Oracle coming up as well as FedEx. Dow right now down 291, NASDAQ off 22, S&P's down 14. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? As Paul says, holy tamale. Yeah, this market came all the way back, folks. Dow Industrials down 287, NASDAQ off 21, S&P's down 14.5. When you take a look at the percentages out here, folks, what you have is this. You get the Dow Industrials down 1.1%. NASDAQ was off 0.2%. That's it. S&P's were off 0.4. And we go over to the small caps. Small caps, bottom line, all-time highs. Small cap, different animal, as is the NASDAQ 100 and the NASDAQ Composite. Small caps out here, this is a closing all-time high, I believe. No, we're almost there. Yesterday was a closing all-time high. We're at, bottom line, that was 1692.46 yesterday. We're at 1691.44. Bottom line, those small caps have juice. What we're going to see out here, Oracle just come out with numbers. We take a look at Oracle. Oracle closed out here today at $46.27. That's trading up $2 right now, $48.19. Numbers on Oracle go like this. The revenue estimate was $11.19 billion. They come in with $11.26 billion. Earnings per share, the consensus was 94 cents. They come in with 99 cents. FedEx is going to be coming out next. They're already bidding FedEx up. This is going to be intriguing. FedEx is not out yet. At least I don't see it on this Bloomberg. But bottom line is that FedEx had closed at a price point of $258. They're basically buying it at $259 and $260. Now, FedEx isn't supposed to come out until $415. That's when they're saying FedEx is going to come out. And as I'm looking at it, it hasn't come out yet. Bottom line is that what the market is looking for is that they're looking to bid that up a bit. Gold contract down $2.80, trading at $12.77. Now, gold is on an ABC structure on the way down. You get a confirmed ABC structure on the way down. You get a price projection inside that gold market of $12.6750. Bottom line, we hit $12.72 today, so we'll see how this baby shakes out. You did volume of 271 million contracts, 1,000 contracts. Bottom line, that being said, meaning how the commodities in general have got hit. In fact, if we look at the whole commodity complex, what you're going to see out here is that there is only out of the tradable commodities and really cattle. I've traded cattle plenty of times, but I've never traded aluminum. Aluminum, bottom line, those are the only two commodities that actually are up today. The rest of them are down. This morning, you had the corn, soybeans, wheat. They were down 4.5% this morning. Cotton still down 4%. Wheat ended up recovering a bit. Well, that was down 2.3%. Beans were down 2.2%. Hogs are off 2%. Bottom line, you get a lot of destruction happening inside that commodity market. Silver never took out its swing low. Silver's at $16.30. That was down 13 cents today. That's going to have to catch a bid once again, because what we did do last Friday, bottom line, both the metals market came down hard. Oil, we're going to have the API numbers coming out at 4:30 this afternoon. Oil today traded down to 77 cents, $65.08. If we go over and we take a look at that oil market, this has been the little ever-any bunny also. This baby just doesn't want to back off. We have been trading the same $65 price point since approximately the 4th of June. And the way oil's trading here, it's like, guess what? This thing wants to pop into 67 bucks once again. Right now, you're at 65. Notes and bonds, bottom line, they want higher price. It's pretty amazing watching this shake out. So, fundamentally, we know, okay, the Fed has gone up on short-term rates, plan on going up on short-term rates a couple more times this year. That being said, guess what? The market participants are buying the 10-year, they're buying the 2-year, they're buying the 5-year, and they're buying the 30-year. There's more buyers than sellers right now. 10-year right now, 2.88. That's what we're dealing with. If we go to the TLT, the 20-year bond plus fund, you're going to see the same type of setup there. We're at 120.97. And the benchmark out here inside the bond market in general, folks, is the highs of the 29th of May. I expect those things are going to get tested. We get a high volume up there. You get the spike up there. The amazing part, to me in particular, just through all these years, each and every time that the market thinks that rates are going to go higher, something always comes in the way, and guess what? They get stuck and they get trapped like rats, and bottom line is that you don't get them higher. If we take a look at the international rates, and this is where you're looking, and this is where even fundamentally it would make sense that our rates can't go that much higher. Why? Because we know Italy is broke, and yet the market is lending the government of Italy money for 10 years at 2.5%. Ours is 2.8%. Gets better. Want to go to Spain? It's 1.2% versus 2.8. You don't have to go much further than that. Bottom line, you can see where the gist is. The gist is it's a one-world market, and the real question is going to be what's going to basically keep these rates low. More than likely, we're going to see, it looks like we're going to have a full-blown trade war that's happening. If we go over and we take a look at the China markets last night got absolutely toasted, particularly the Shenzhen. That was down 5.7%. In this market, this baby, you have 2,147 stocks. 1,928 of them were lower. I believe probably half of that was basically stopped because they were 10% down. If you take a look at the high volume February 9th swing low, it just blew it apart. I mean, it took this thing apart. That high volume swing low, folks, from February 9th, that's the benchmark, right, was 1658. You had volume there of 19.3 billion. This thing took it apart like butter. You know, we're at 1594 right now, so you're another $100 below the low. On top of that, we did 21 billion shares versus 19.3. So now what you have, now you have a lower low, higher volume. Bottom line, this thing's not done going down. You've just broken consolidation that's been in place since March of 2015. If this thing breaks another 20 points, oh my God, you're down there at like 1,200. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 287, Nasdaq off 21, S&P's off 13. FedEx just come out with numbers. Numbers go like this on FedEx. FedEx closed at 258. It's trading at 256.43. They made their revenue, the earnings per share, basically were flat. Not flat. It was what they thought they were going to get. Revenue out here was let's see, earnings per share was the estimate was 569. No, yeah, 569. They made 591. Revenue 17.3 billion. Bottom line 258. It doesn't look to me like you're catching a bid. Yeah, no, it's not bad. It was down $5 today. Bottom line is up. You're up 30 cents right now. Oracle also came out with the numbers. Oracle bottom line is that that little baby. Take a look at. Oracle closed at a price point of 46.27. That's trading at 46.79, and Oracle, the revenue estimate was 11.1 billion. It did 11.2. Bottom line is that they made both top line and bottom line. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. And don't forget, folks, Andy's got a great show here at TFNN. 5 to 6 Eastern Standard Time every Tuesday, Thursday. He also got 2 great newsletters. He's got the Daily Essentials, which is his daily newsletter. He's got the Technimental Commodity Report, which is his weekly newsletter. So the weekly one would be an investment newsletter. The Daily Essentials would be a trading newsletter. You can get both of those with a 30-day money-back guarantee by coming over to our website at TFNN. Andy Heck, what's going on?
How you doing, Tom?
Good, man. Yourself?
I'm doing good. I'm doing good. So, commodities, I'll tell you, I'm looking at these markets. I'm a little concerned about a risk-off time across all of them. What soybeans did this morning was particularly ugly. I mean, the price came back, but it did drop to the lowest level in a decade, down at 840. Gold put in a bearish key reversal on the weekly chart last week. And, we're seeing some buying in the bonds, some buying in the dollar. Just feels like kind of a light flight to quality here. Stocks are starting to crack. The trade rhetoric is really ramping up. And I think, it's time to put on a helmet.
Time to put on a helmet. Okay. So let's start with beans.
Let's start with beans.
The soybeans, if we go back to 2012, we're at $17.94 a bushel. You're at $8.89. Just as you said, these are decade lows. Because last time I go back, it's hard to believe that we're in 2018, but it is 2008 that you're down at these levels.
It's that sell-off was too much for this time of the year. There's too much uncertainty about weather. We're only in the middle of June here. We got a lot of growing season to go, and soybeans, if it were not for the trade issue, we would not be seeing this kind of market action, in my opinion.
Right. So let's walk through this. So if we take beans, right, when we seem to talk about commodities, every year we've been growing because of technology, a lot more food. But of course, as you've explained to us for years, there's no doubt there's more people, so we need more food every year, right? The storage, how does the storage work on like the soybean market? Do we have a lot of storage? Do we have, how does that work?
We have decent amount of storage, and the technology has improved the conditions within the silos to store beans. No question about it. And we've had 5 straight years of bumper crops, but they don't last forever.
Right.
And if we go back to previous years, we had a drought concern last year when and that was really over wheat, but beans reacted to that. Which
would make sense, right? Yeah.
Right. Yeah. We had in early March a concern about drought in Argentina and a lower crop. Now, the planting season just came to an end, and we're in the growing season now. This is a very uncertain time of the year. It's not that I can see beans, trading in a wide range at this time of the year, but it's the trade issues that are pushing them down here. We have to remember, China buys 1 out of every 4 acres of U.S. soybeans. Brazil's
they do. So that's 25%.
Exporter.
Okay.
Right. 25% of U.S. Now, they're going to slap a tariff on it. They're going to turn to other places to buy beans. They could pile up here, if we have another bumper crop this year. Now, there's 2 things going on here in soybeans. First of all, if by any chance we come to some kind of an agreement with China, these beans can scream, no question about it. So, it's not like this is fallen and this is, this is over. we can see a tremendous amount of volatility in these markets. But the fact that it was the beans today tells me, that this is China in all of the commodities. What we're seeing here is the potential for risk off. Look, we've seen copper. Copper went from 301 to 331 back to 304. Well, we're seeing a lot of volatility here, but my guess is that this is being orchestrated by the trade issues here.
So here, let's walk through that. So let's say that we're China, right?
Mm-hmm.
We need to feed our people, that's for sure. Okay, so
Absolutely.
If they're buying 25% of our beans, where else can they go? What other countries do a lot of beans?
They can go to Brazil.
Okay.
They can go where the crop wasn't bad this year. Certainly.
Okay.
Eventually, it will come to the U.S. because they'll buy from countries that we sell to. It'll transship.
Now, if we go, let's go to Brazil first, because this gets intriguing. Because
Brazil, Paraguay, South American countries that grow a decent amount of beans. There's also some beans that grow in Europe. There's also some beans that grow in other areas of the world.
Brazil would be a big one, right?
Brazil is the big one. Brazil is the second
what
biggest.
What happens? Like I'm looking, the beans in Brazil. You're talking about their currency have got a lot cheaper because their currency has just got destroyed by like 30% in 5 months.
Exactly. So it behooves them. It's the price of beans didn't go down as much in real terms that they're going down in dollar terms.
Yeah.
So
Okay.
It's interesting. It's interesting. I just
it seems that it's going to be we're in an intriguing time because it seems like it's going to be the fight between, number one, do they slap a tariff on it, and then even Kevin Hinks this morning, he was saying, well, hey, listen, man, if we come into a weather market, that more than likely would overtake everything, right? So that's going to be the battle.
That's why I'm saying big volatility. But what my point is really about today's action. And today's action is like too much too soon. If we had good weather and we're like at the end of July now and all of a sudden the beans just dosed because, the crop is looking good and then we have these trade issues, in the background. My point is, Tom, too early. It's too early because the weather could take these things right back up in a heartbeat. You get a dry week and beans are back at $10.
Okay, so now let's talk about wheat.
Wheat, different story. Wheat, U.S. is only a small exporter. Russia's big, Australia's big, Canada's big. And
okay, good. Stay right there because then, wheat's come down, so it looks like inside the wheat market, it's saying, hey, the weather's going to be all right, right?
Right, but it's not so great in Russia. So wheat is a buying opportunity here.
Yeah, stay right there, folks. Andy and I come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking about man, Mr. Andy Hecht. We're talking markets, we're talking commodities, and of course, don't forget, folks, Andy's going to be coming up right here, 5 to 6 Eastern Standard Time. Now, no matter where you are listening, if you happen to be listening in the car radio, remember that you can get us 24 hours a day right on YouTube. Just go to TFNN Corp, hit subscribe right on your phone. All the programs right there. You're going to love the digital videos as well as the audios. So wheat, bottom line, has been down, and that's where I guess it depends on what happens in Russia with weather.
Yeah, it's
right?
been dry in Russia, but the wheat market, listen, soybeans went to a decade low today. The wheat market still didn't even descend through its late April lows here. So it's holding up nicely because it's really not one of the commodities that's on the front lines in the trade issues. But one of the spreads that I watch that tell me about the path of least resistance for wheat really weakened today, and that's a matter of concern. I look at the Kansas City hard red winter wheat versus the Chicago soft red winter wheat spread that was trading at over 20 cents a bushel, and in the July contract that went down to under 4 cents today, and that's a sign of weakness for the wheat market. And in September it's down to 7.5 cents. So you know, these things move sympathetically. Like I said in the last segment, Tom, last year you had wheat explode on that drought in the Dakotas and in Montana. Soybeans and corn went along for the ride. Now soybeans are tanking. Corn is going down along for the ride, and there's some pressure from the oil patch on the ethanol. And you have wheat, you know, which is going down along in sympathy with those right now. And, you know, it comes to a point where, you know, there will be some, we do export wheat. So we can build up here if you have another bumper crop year. We've had 5 straight years of bumper crops. No guarantees that this will be the 6th. But if it is the 6th, we could break some patterns here in the markets that you know, that are ugly on the downside.
Wow. So when we look at this commodity complex, Andy, just on the trade issues with China, what other ones should we be watching?
I think palladium's important because that's on the list of 1,300 products coming in. And you know, if automobile sales start to slow, the platinum group metals, platinum today really tanked. I mean, it's down at the lowest level, you know, since early 2016 now. That broke down. I think the base metals certainly could be in trouble.
Look at that platinum. Holy cow.
Yeah. Copper is telling us that. That's why I think commodities are telling us to put
the car business can get taken apart, man. This is interesting, man. This is an ABC down in platinum, man. It blew out.
And 812 is the level we're looking at there, and that's a severe level. So, you know, that's why at the beginning of the show when I came on, I said, you know, time to put helmets on. We're getting a lot of kind of signals from commodities here that they're weakening. I'm tightening up stops on some long positions I've had on for a while. And, I don't think it's a reason for panic here, but certainly risk off. Money is going to flow to the dollar. Money's going to flow to the bonds. Now, the bonds are interesting, Tom. Very interesting. I don't think we can afford to have rates go up too much because of Europe. However, if this trade war with China gets really nasty, they hold a lot of our bonds, and they can cause a lot of problems in the U.S. bond market and push yields much higher, which could trigger recessionary situation. Sure. So, trade war, there's a lot of tools out there. The question is, this July 6th is the deadline? Is this just like posturing? Are they having negotiations? Is this posturing? Or is this at a point now where, we slap tariffs, they meet those tariffs, we bump the tariffs up to 200 billion, they bump the tariffs up, we keep going tit for tat, and then maybe they come and sell some bonds to give us some aggro. It's as bad for the Chinese economy as it is for the U.S. economy. The bottom line is trade wars don't do good for anyone. And having said that, commodities prices are on the front lines because these are the things that are getting tariffed. So
yeah, well, we definitely don't want to look back to the last full-blown trade war, folks, because that was in the Depression and just made the Depression worse. So,
but one of the things to keep in mind, though, is that the U.S.'s hand is fairly strong here because the Chinese economy depends on exports to we buy a lot of Chinese goods here, no question. And we've seen a crack in the Chinese stock market. And the last thing that President Xi wants to do is go into a recession in China and see growth go from 6.5% under his new normal down to 3% or 4%. That would really throw a lot of kind of a monkey wrench into all his plans. So I think.
Yeah, but what they're going to do, China's just going to basically, have them stop trading in the stock market, which we can't do. I mean, they'll just basically close down the markets. Okay, time out here. Right.
But their revenue will come down. There's no question about it.
Our expenses are going to go up dramatically. I think people will be in shock, like the amount of money that could go up pretty quickly. People are having a hard time already making paycheck to paycheck. So it's going to be intriguing.
Remember also, we'll eat. We're an agricultural society here, right? Our biggest exports to the world are corn and soybeans, energy. We've gained some self-sufficiency in the energy sector. But when it comes to a lot of the others, we import. And those prices will go up. Our domestically produced products will not go up in this environment, unless, inflation starts running rampantly. But commodity prices are not signaling inflation right now. As a matter of fact, this is actually, and the Fed, they might have to back off that fourth interest rate hike that they discussed last week very quickly because, threats of recession, they don't want to stop economic growth, or they certainly don't want to cause, a recession, another add fuel to the fire here. The trade issue
what's so intriguing is that the way that, whether it's you and I talking, whether it's market talks, that, we go from one subject to another subject. And like when you brought up the bonds, right, it would seem to me, and I'm really glad you did, because it seems like common sense. All we've been hearing, folks, is that, how many beans they buy off us and this and that. All as China would have to do, there's no doubt, man, is put a tweet out that, guess what? We are going to pull back in the bond market. And that had hurt everyone like so quick you couldn't see straight.
Absolutely. So that's a tool, that's a tool in their back pocket. And if the trade war really got out of hand, hey, anything is on the table. We're not at that point yet. But the threat of that is the threat, and that's why the helmet. Thus the helmet.
I think you better write on that tomorrow morning, I think, right? Before someone else does, because I think that's the number. That's basically the M60 that can get unloaded. There's no doubt.
Oh, the bond market? Absolutely.
Yeah.
But in there for a year. And by the way, they do that, they screw themselves because the value of their portfolio drops.
For sure.
So
right,
it's
but
not necessarily
they've done
easy,
fine
you know?
for 30 years. Yeah.
Right. They've been buying for 30 years. You can't. It's not like you can turn around and sell it in a day.
No.
Well, we got to look at oil inventories together.
Well, no, stay right there. We're going to come back with oil inventories. I get the top line. The crude stocks fell 3.02 million. Andy and I were going to be back with the rest of the Cushing, gasoline, distilled. Stay right there, folks. Andy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Talking with our man, Mr. Andy Hecht. We're talking markets, commodities, and we got these API numbers for you. So what you have, Andy, is that we had crude fall 3.02 million. Cushing had a withdrawal of 1.59 million barrels. Gasoline was a plus 2.11 million barrels. Distilled was a plus 757,000 barrels.
Okay, kind of a nothing, I would say, on that report. But you know, tomorrow is going to be the big one
love
because
that if it's a nothing.
last week, you know, the EIA went totally the opposite way. We had 3 bills from the API and three withdrawals from the EIA last week. It's going to be interesting to see what they come out with tomorrow. Doesn't look like the oil market is reacting much to this data here.
No, that'll make sense. Listen, it seems to me that this oil market just doesn't want to back off. I mean, what, 65 to 70 bucks? It looks like it's game here. You know what I mean? So.
Well, listen, when it comes to oil, Tom, it's all about Friday. We have to see what comes out of OPEC. This is the next couple of sessions, you're not going to see anything come out that's going to give you any view, any kind of clues about trends and so on and so forth. The market's waiting for OPEC. And
now, does the meeting start Friday, or is it all weekend long?
Oh, it starts Friday and ends Friday. They basically go into a room. Yeah, I don't think they could get the Iranians and Saudis in the same room for more than 20 seconds.
Okay.
So they basically go in, they come up with a statement, and they'll release it, late Austrian time, which is probably in the morning.
And they already know what they're going to say anyway, really, right?
They already know, because Vladimir Putin writes the statement these days.
Okay. Wow.
The Rosneft and the Russians are basically doing that, and President of the United States put some pressure on the Saudis. He wants to see some production increases out of OPEC, and my guess is that we're going to see some small production increases. How's the oil market going to take that? Well, I think 62.58 is in play on the downside.
Okay.
If we go through that level, I think $58 will hold any sell-off in crude oil here. I think the economy is too buoyant. We've seen that all year long. I don't think, anything's going to throw. But a prolonged trade situation that causes some recessionary pressures, all bets are off in all commodities here. Now, gold's the interesting one here, Tom, for me, because the gold market is really looking ugly. It's looking the ugliest it's looked in a couple of years. And quite frankly, gold, the trend of higher lows remains in place as long as gold could stay above 1236.50 here. But, we're not far from that level. Now, having said that, we weren't far from 1377.50 in April. And gold's been the kind of commodity that you buy when it looks its worst, you sell when it looks its best. And that's been the trading strategy that's really worked. However, right now, the dollar is consolidating around the highs. I think it's the dollar that's going to tell us which way gold's going to go here. Gold's already violated what it did in 2016 and 2017. We kind of, the lows of the year came on the first day, and we just kept kind of going higher, making higher lows and higher highs. We are doing exactly the opposite this year. We're coming close to those late December 2017 lows, which I think is a line in the sand for the bullish trend.
Okay, brother, I'm going to let you go because you're going to be yapping in another 14 minutes for another hour.
I'm going to be squawking and talking. I'll see you later,
That's
Tom.
Right, man. Thanks so much, man. Have a great one. Have a safe one. That's our man, Mr. Andy Heck, folks. He has 2 great newsletters. Just go to TFNN. You can check them out. 30-day money-back guarantee. Andy's going to be coming right at 5 o'clock. Starbucks, SBUX. Okay, so Starbucks out here for this morning just right now, actually. Starbucks closed at $57.43. This is trading right now at the 56. No big deal. It's down $1. Let's see what they have to say. Starbucks. Let's see where I want to start right here. Okay, so America's longest running joke about Starbucks and every economy may be coming to an end. The coffee behemoth is retrenching in its home market as it contends with sales growth that Chief Executive Officer Kevin Johnson acknowledges isn't fast enough. The chain said Tuesday expects comp sales to be rise just 1% globally. It's well below the 2.9% analysts were expecting. And it totally makes sense, too, by the way, folks. I don't know, in the communities that you folks live in, what I have definitely seen in the Tampa, St. Pete, Clearwater area, there are plenty of other coffee shops that have opened that are great coffee shops and that can compete with a Starbucks. And that's pretty intense. There's plenty of them that will go out of business. But the difference is we absolutely have a few of them around here that and I'm sure you guys and ladies do also. Starbucks plans to close 150 company-operated stores in densely penetrated U.S. markets in the next fiscal year, 3 times the number that it normally shuts down. Our growth has slowed a bit, Johnson said in an interview. I expect better. I think the shareholders deserve better. Although business abroad has been booming and the chain has been opening more and more cafes, the U.S. sales growth has stalled for a company that brought espresso to the masses. They have 14,000 stores domestically. Starbucks is now pumping the brakes on licensed and company-owned operations with a renewed focus on rural and suburban areas, not over caffeinated urban networks where locals already joke that the next Starbucks will open inside an existing store. Yeah, it totally makes sense. What they're not saying out here is that actually how much competition they have, and that's, I'd say, one of the big ones. Starbucks also is going to return cash to shareholders, and they're going to do buybacks. At $25 billion in buybacks, they're going to do a dividend upcharge of $10 billion, increase from the previous guidance. The company said earlier this year that the cash that it got from a license deal with Nestle would go to support the company's growth in the U.S. and China. The China market still offers a lot of potential, but the current political environment, oh yeah, there you go, a trade war is looming, or the government picking on each other has definitely cast a shadow over the long-term prospects for Western brands in China at this particular point. Yeah, that totally makes sense. There's no two ways about that. Let's go over and go check in with Oracle again, because we had Oracle come out with numbers after the close. Oracle closed at 46.27. That's trading at 46.60. FedEx came out with numbers also. FedEx closed at 258.39. That's trading 259.60. Let's see what FedEx has to say about just business in general. So FedEx reported fourth quarter profit that beat expectations as an e-commerce boom boosts package deliveries and manufacturing, drives growing demand in the freight hauling business. FedEx and other package delivery companies have benefited from online shopping. Has surged 17% surged 17% in 2017. It reported adjusting earnings per share of $5.91. They had expected $5.69. Their revenue was $17.3 billion. Analysts estimated it was $17.2. The company, let's see. Okay, so let's see. The industrial freight is also rebounding with added bonus of rising cargo prices as trucking companies struggle to find enough drivers. Rates at less than truckload business where FedEx competes are expected to rise 13% this year. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So lots of moving parts out here. You had Asia get absolutely toasted last night, folks. What I expect you're going to see out here tonight, I don't expect you're going to see much lower lows tonight in Asia. The bottom line is that they do want to go lower, but that was quite a downdraft last night. They had to stop thousands of stocks, well, I believe 1,000 stocks, because of the, they went 10% down. That was limit down. And limit down is a big deal. There's no two ways about that. As I said to Andy a little bit earlier, though, what does happen if you actually, here, let's bring up the Asian market right now, because when you actually look at this, you can bring up, I'm just going to bring up Shanghai market. And what you're going to see is that this has been going down for quite some time. We bring this up, put this back on a 10-year basis, and what you're going to see is that this never made it back to its highs. High was generated in 2015, 5178. It's half of that right now. It says 2,900. 2,900, it's going after, it says 2,600. I expect, number one, you'll get into that 2,600. The real kicker there will be at 2,600 is to just give up the ghost and go down to 18. We traded 1,800 in 2013. We traded down to 1,600 in the Depression going back into 2008. So that was one monster number. The 2007 high is 6,100. It went down to 1,664. You did the counter trend bounce, and it was 2015. They're about 3 years ahead of us. Now you're heading back down. So the next big number to keep your eye on is like about 300 points lower than we are right now. And the way that the volume came in this market, it does look to me like, bottom line, we are going to go there. If you haven't, if you'd like to test drive the gold report, folks, great time to do it. Yeah, the metals are getting croaked, but guess what? The equities have still held up, and there's major divergence there. That's the bottom line. You can come over to our website at TFNN. Go to newsletters, go to investment newsletters. You can check out the gold report 30-day money-back guarantee. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Bam! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.